Hi, and welcome to the 11th episode of Kanga Crypto News, where I'm going to present you with the latest information from the world of cryptocurrencies. Today we're going to talk about the ETFs on Ethereum, Bitcoin and its current situation on the market, veto posed by Biden, which can cost him the success in presidential elections, and also the competition of Musk and Nakamoto around the position of the richest person in the world. Remember to subscribe to the channel, give us a thumbs up, click the bell button so that you won't miss out on any news from the world of cryptocurrencies. Let's get started. Only 10.6% of the total Ether supply is currently on centralized crypto exchanges, its lowest level in years. Over $3 billion worth of Ether has been removed from centralized crypto exchanges since May 23rd approval of spot Ether exchange-traded funds, ETFs, in the United States, signaling a potential upcoming supply squeeze. The amount of Ether on exchanges fell by around 797,000 between May 23rd and June 2nd, equivalent to $3.0 billion, according to CryptoQuant data. Lower exchange reserves imply fewer coins are available for sale as investors move their own coins to self-custody for purposes other than immediate selling. Glassnode data shared by BTC Eco analyst Leon Whiteman shows that percentage of circulating Ether supply held on exchanges is also at its lowest level in years at just 10.6%. Last week, Bloomberg ETF analyst Eric Balchunas tipped Ether ETFs as having a legit possibility of launching by late June. Some analysts believe Ether could break its November 2021 all-time high of $4,870 once spot Ether ETFs start trading due to increased demand pressure, similar to Bitcoin after the trading launch of spot Bitcoin ETFs in January. Ether could benefit even further from demand pressures than Bitcoin, as it does not have the same level of structural sell pressure, DeFi Report crypto analyst Michael Nadeau said in May 28th report. For example, Bitcoin miners are occasionally forced to sell BTC to cover the cost of mining, while Ethereum validators do not incur the same operating expenses as Bitcoin miners do. However, there are also concerns that Grayscale's Ethereum Trust ETH, which manages $11 billion in funds, could influence Ether's price action if it follows the Grayscale Bitcoin Trust GBTC, which saw $6.5 billion in outflows in just the first month after approval. How do you think those events are going to influence the price of Ethereum? Share your opinion in the comments section, and now let's move on to the best-known cryptocurrency in the world. Bitcoin briefly topped $70,000 Monday for the first time in a week before retreating to its familiar trading range, continuing its sideways price action. It recently changed hands at around $69,200 and went up to $71,000, while Ethereum remains around $3,800. Bitcoin and the broader crypto market have spent more than 2 months consolidating since March, when BTC had a record price above $73,000. This correction phase now appears to be nearing an end. Bitfinex analysts said on Monday market update. According to the report, selling by long-term hodlers was a key reason for Bitcoin's correction from all-time highs, but blockchain data suggests that these hodlers have started to reaccumulate BTC for the first time since December 2023. The number of new Bitcoin and Ether accumulation addresses has also been growing over the past month, a sign of increasing bullish sentiment despite the price stability, Bitfinex analysts added, citing CryptoQuant data. Crypto analytics from Swissblock noted that the $70,000 and $73,000 levels pose significant resistance, capping BTC's price. Short-term pullbacks are being treated as buying opportunities, with the $67,000 level proving to be a reliable support, Swissblock said in a report. The next week could be an interesting one to watch, with key inflation data release and Federal Reserve meeting that could fuel volatility in either direction. Joshua Lim, co-founder of crypto derivatives principal trader Arbellis Markets, told CoinDesk. That's not everything. More and more news are pointing that the trust towards Bitcoin is rising, and so its price could also rise soon. One of the indicators are the inflows of large numbers of BTC from centralized exchanges, which can point to the inclination towards long-term accumulation of Bitcoin. Investor confidence appeared to be on the rise in the crypto market lately, and Bitcoin has been a major beneficiary of this positive trend. Consequently, there has been a continuous accumulation of BTC amongst large-scale investors despite its somewhat frustrating price action. The premier cryptocurrency's price may have ended May beneath the psychological $70,000 mark, despite having touched a level a couple of times in the last 2 weeks of the month, and now this level has been broken again. The latest on-chain data suggests that the faith in Bitcoin has only continued to grow strong. Prominent crypto analyst Ali Martinez shared by a post on the X platform that substantial amounts of Bitcoin have been making their way out of centralized exchanges. This on-chain observation is based on the Crypto Quant Exchange Reserve metric, which tracks the amount of a particular cryptocurrency in the wallets of all centralized exchanges. An increase in the metric value indicates that investors are making more deposits than withdrawals of a crypto asset, Bitcoin in this scenario, into centralized exchanges. Meanwhile, when the metric declines in value, it implies that more coins are moving out than into the trading platform. According to Martinez's post, more than 37,000 Bitcoin, worth roughly $2.53 billion, have been transferred out of crypto exchanges in the past 3 days. This significant exodus of funds indicates a change in sentiment and the long-term hodling strategy of Bitcoin investors. While it is difficult to tell the exact rationale behind the massive outflow from exchanges, the movement of funds from trading platforms suggests an increase in investors' confidence. This indicates that many investors might be convinced by the future promise of Bitcoin, thereby opting to store their assets in self-custodial wallets in the long term. What's more, the downward spiral of Bitcoin supply on centralized exchanges could trigger a bullish rally for the premier cryptocurrency's price. The sustained decline in BTC's balance on exchanges could result in a supply crunch. For context, the supply crunch refers to a scenario or period during which the supply of a particular asset is lower than the demand for it, resulting in a surge in the asset's value. And now let's move to the United States, where the presidential elections are coming soon. After a period of intense scrutiny of the cryptocurrency industry, many speculated that the Biden administration had reversed its stance by allowing the U.S. Securities and Exchange Commission (SEC) to approve several spot Ethereum exchanges traded funds (ETFs). However, President Joe Biden has vetoed the latest resolution intended to quash the SEC's crypto asset rules in Sub 121. Biden's veto has generated significant animosity within the crypto community, leading to a widespread belief that Biden has lost the support of the entire crypto industry. 2 days ago, President Joe Biden vetoed the legislation designed to overturn the SEC's Sub 121, which is a continuous accounting guidance issued by the SEC, mandates that financial institutions and firms safeguarding customer digital assets consolidate those assets on their balance sheets and provide specific disclosures. These stringent accounting requirements make it prohibitively costly and impractical for banks to offer large-scale crypto custody services. Regarding the veto, Biden stated his administration would collaborate with Congress on a comprehensive and balanced crypto regulatory framework, but vetoed this particular resolution to uphold the SEC's accounting authority. The crypto community reacted negatively to this decision. Skybridge Capital's Anthony Scaramucci commented that Biden's stance on crypto could have unforeseen consequences. Biden's position on crypto may cost him more than he realizes, Scaramucci wrote on X. It was a really bad decision to veto that bill, especially at this critical time. Galaxy Digital's Mike Novogratz weighed in on Biden's decision. "This is disappointing and maybe predictable," Novogratz said, snatching defeat from the jaws of victory. That Democrats were trying to defuse Trump being the crypto president and were doing a great job, but this doesn't help at all. Whoever is advising Biden needs to have his head examined, the Galaxy founder added. Perian Boring, the founder and CEO of Chamber of Digital Commons, stated, "Biden's veto of the SEC's illegal crypto custody regs is not the end of this fight. Congress can override this veto. Together, we will defend our freedom of speech, digital property rights, and our right to assemble. Come November, we will cast out the anti-crypto army once and for all." Ryan Sean Adams, the founder of Bankless, also remarked that this decision will impact Democrats in the upcoming general election. Biden just vetoed the only pro-crypto bill to ever come across his desk, Adam remarked on X. "This was a layup. Sub 121 is an anti-crypto rule put in place by Gensler's SEC to stop banks from holding crypto," the Bankless executive added. "Crypto hates it. The banks hate it. All that he had to do was not veto the repeal. This will cost Democrats in November." Out of the 335.89 million US residents, it is estimated that 50 million eligible voters are crypto advocates. With Democrats like Elizabeth Warren and Joe Biden throwing shade at the crypto industry and Donald Trump endorsing it and pledging to protect crypto supporters, the president's decision appears unfavorable from the spectator's viewpoint. The president's recent veto might have been the straw that broke the camel's back. Veto of Sub 121 by Biden shows that there is no real effort in the Democratic Party to work with crypto enthusiast Eric.eth wrote on X. The ETH ETF was approved because the SEC had no grounds to reject it, period. The Democrats' war of crypto is more full force than it has ever been before. The Thailand Securities and Exchange Commission (SEC) approved the first spot Bitcoin exchange-traded fund (ETF) in the country, making it available only to ultra-high net worth individuals. According to the Thailand-based daily newspaper Bangkok Post, the country's SEC gave the green light to the local asset management company One Asset Management to launch its spot Bitcoin ETF. The investment product is called the One Bitcoin ETF Fund of funds unhedged and not for retail investors. However, the report says that the ETF will not be available for small individual investors and only the ultra-high net worth individuals and institutional investors can benefit from the BTC investment product. Per the Bangkok Post, the Thailand-based spot BTC ETF is given a risk score of 8, putting the product in the high-risk zone. This is usually due to the high price volatility of crypto assets. Moreover, One Asset Management would have to invest 11 global funds to ensure the BTC ETF has required liquidity and security for investors. The US and Hong Kong have already reviewed the Thai policy for the spot BTC investment product. Another Thailand-based investment company, MFC Asset Management, is still waiting for the SEC's green light to launch its spot BTC ETFs. Per the report, MFC's investment product will also be available for institutions and rich investors. The Thai SEC's approval of spot BTC ETFs comes as the investment products have recorded impressive success in the US in March. The regulator adjusted its rules and it gave the price asset management companies the green light to explore the crypto industry. On March 14th, Thailand approved the tax exemption bill on cryptocurrency gains to bolster its digital economy. And at the very end, we're going to observe an interesting comparison of two rich personas. One of them is known by everyone, Elon Musk, and the second is the mysterious Satoshi Nakamoto, whose identity we don't know. At this moment, Tesla's Elon Musk holds the title of the wealthiest individual on the planet, as reported by Forbes' real-time billionaires list on June 1, 2024. However, there exists a potential future where Bitcoin's creator Satoshi Nakamoto could surpass Musk's fortune. Given the current value of BTC, the price would need to increase by just 210% for the anonymous creator of Bitcoin to become the wealthiest person globally. Could Bitcoin's creator overtake Elon Musk? A 210% Bitcoin increase holds the answer. Elon Musk is a prominent business magnate, investor, and entrepreneur renowned for its transformative impact on the technology sector through ventures like Tesla, SpaceX, and The Boring Company. As of June 1st, according to the Forbes real-time billionaires list, Musk is the wealthiest individual globally with an estimated net worth of $210 billion. While many are aware of Musk's status, some still mistakenly believe Amazon's Jeff Bezos holds the top spot, though he has been demoted to the third richest person worldwide. Few realize that Bitcoin's creator, Satoshi Nakamoto, ranks as the 23rd wealthiest individual in the world. It is believed that Nakamoto mined just over 1 million BTC when launching the revolutionary network that would alter the course of history. Nakamoto's fortune is just below that of David Kenneth Roy Thompson, the third Baron Thompson of Fleet and head of the affluent Thompson family, who currently possesses $72.6 billion in wealth. However, Nakamoto does surpass the 24th wealthiest individual, Julia Koch. The president of the David H. Koch Foundation holds $66 billion, slightly less than Nakamoto's current $67.72 billion in assets. For Nakamoto to overtake Musk, the value of BTC would need to increase by 210% to reach a spot market price of 210 per coin. At that level, unless Musk or another individual acquires more assets, an anonymous person or group could claim the title of the richest on Earth. Whether Forbes or the media would recognize Nakamoto on the real-time billionaires list remains uncertain, as Bitcoin's creator is not currently acknowledged as the 23rd wealthiest. Should this extraordinary event occur, it will likely be hailed as a historic milestone by media outlets specializing in cryptocurrency and blockchain topics. As the crypto realm teeters on brink of reshaping wealth distribution, the hypothetical ascent of Satoshi Nakamoto poses a provocative narrative against the backdrop of traditional financial titans like Elon Musk. Should Bitcoin surge to the projected 210,000 per coin, it is not only redefines Nakamoto's legacy, but also tests the flexibility of wealth indices in accommodating enigmatic figures. This looming possibility highlights the volatile intersection of innovation and valuation, marking a potential epoch in economic history. What do you think about Satoshi Nakamoto becoming the wealthiest entity worldwide? Share your thoughts and opinions about the subject in the comments section below. This was the 11th episode of Kanga Crypto News. More coming up soon. Remember to give us a sub and a thumbs up. Thanks everyone, and see you in the next episode. Bye!
We are Kanga, beyond crypto.